equity market rally has been impressive, but also justified given this extremely robust economic backdrop combined with the abundance of monetary and fiscal support. So we think that above average valuations are warranted, and we think this equity market rally does have further room to run.
So if above average valuations are warranted, why is it that interest rates are such a huge focus right now? The conventional wisdom is that as interest rates go higher, those valuations and what people will pay for stocks tends to go lower. Why the record highs in the market right now, given the backdrop in rates?
Yeah, well, we have to think about the context as to why interest rates are rising. It is not because central banks are stepping in and tightening monetary policy. Instead, it is because of that stronger global growth backdrop that will inevitably feed into stronger corporate profits and, of course, higher stock prices. But, of course, within the equity market space, there are some notable pockets of opportunity where rising interest rates will benefit, particularly in those value-oriented sectors of the market that benefit from the reflationary trade, notably resources, financials. These are the pockets of the market that actually do well in an environment of rising interest rates.
Have those sectors outrun their coverage, so to speak, Candace? I mean, you look at the energy sector, the single best performing one in the S&P so far this year for your resources trade. The financials are the second best performing sector by a wide margin. How much is already priced into the marketplace right now, given the fact that these stocks have been on a tear ever since the pandemic lows over a year ago?
Oh, absolutely. The performance gap has narrowed quite substantially since November. But remember that that performance gap or that valuation gap between growth and so-called value stocks remains quite sizable in general after a long extended period of value-related underperformance. So we do think this has more room to run here as the global economy continues to gain ground throughout 2021.
Okay, so if that's the case, are there specific areas within those natural resources type companies, financial type companies that you find interesting? Is it the smaller mid-sized banks? Is it the money center banks? Is it oil and gas? Is it other parts of the mining complex? What exactly is the value-oriented trade right now?
Yeah, right now the value-oriented trade is those sectors of the market that are closely tied to the fortunes of the global economy and the reopening trade. Of course, the sectors that lagged through the pandemic in 2020. So within the resources space, obviously oil and gas, on the prospect for a resumption in energy consumption this summer as the economy continues to reopen. Financials, we think, still have a lot of room to run given the prospect for higher interest rates, particularly at the long end of the curve. So taken together, this value-oriented trade, based on the reflationary narrative that we've been talking about of stronger growth, ample liquidity, should carry these still underappreciated sectors higher throughout the year.
Shepard Smith here. Thanks for watching CNBC on YouTube.